And again, I know no one out there wants to hear that. Everyone wants to be a bull on Bitcoin. But the bottom line is, if you compare this to rallies in 2018, 2019, if you compare this to rallies in the previous cycle, it's very, very similar. We haven't seen any major breaks of any levels yet that would denote a bottom in Bitcoin. So I don't even think we've hit the lows yet on Bitcoin. Now let's just take a look at the chart. I want to show you what we've done here. So if you take a look at the chart, so number one, it's been a great rally. There's nothing to take away from the rally. But again, in the scheme of things, look back at the chart in 2018, 2019, there were lots of bounces of this magnitude. In fact, there were bigger bounces. I still remember vividly where we hit a low of 3,500 on Bitcoin back in 2019 or so, and we actually doubled the price before retracing all the way back down to 3,500. So again, that was a 100% move. We haven't even come close to that on the chart of Bitcoin at this point. Now, if we look at this area here, channel right here, the blue channel tells us that there's resistance here. And look at how this line is right at 25,000 and it keeps on getting pushed back under. And we're seeing the daily chart starting to decline. The key here is this. Is there a chance we break above 25? Of course. If we break above 25, you have upside to 30,000. 30,000 is the pivot low from the bull market of 2021. It's also where we consolidated before breaking down. That would be your next move. Only would I get bullish and start saying there's a bottom in the Bitcoin market if we trade and stay above 30,000. That would be significant. Until then, I'm a bear. If we break 22,000, it's going to be a big shot straight down to 18 and change. So again, I'm still in the camp that the lows are not in, the bear market is not over in crypto, even though everyone out there, you go on Twitter, you go on any social media, you would think that the lows are in.
Bitcoin, BTC, and Ether, ETH, have lost their momentum over the past 7 days, with each posting 6% declines as investors worried about inflation and continued monetary hawkishness. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and Verified Crypto Investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
Yeah, so oil, interestingly enough, has been trending in kind of the lower range for the past year and a half since the invasion of Ukraine. And I think this is what we expected, right? Is there's never any sort of situation where oil totally disappears off the market. Even when countries ban it, there's still ways to get it out. You just have to sell it at a discount. And that keeps the price of oil down substantially. Now, short term, there is a bull flag on the chart that could tell us a little spike is coming, but I still see further downside in oil, not just because of what you mentioned, but also because of a slowing global economy. And again, as long as the Fed keeps interest rates here or higher, you have to think that the economy in the U.S. will slow down. Even China's reopening, it's not going to last forever in terms of the strength. And so I do think over the mid to longer term, you're headed back to the 60s on crude oil. Yeah, so interesting earnings on both of those. So we know Home Depot's earnings were not great. Their earnings themselves were okay. It was their guidance that really was suspect. And I think what we've seen since COVID, everyone was buying things to fix their homes, buying new wood, lumber, all that kind of stuff. And we're now seeing a slowdown of this. And if you look at credit card debt is starting to balloon again. What it's telling us is that the consumer is starting to get strapped. They're starting to have a little harder time. And so I think for the most part, you have to be aware that, number one, that's a precursor to a recession. And number two, that these retailers are going to struggle for the next couple of years as long as the Fed keeps interest rates high and kind of forces the economy into a recession. These retailers are going to struggle. That includes Walmart, includes Target, includes Home Depot, basically all of the retailers across the board.
On Friday, the two largest cryptocurrencies by market capitalization plunged after the U.S. Commerce Department reported that the personal consumption expenditures, PCE price index, climbed by an unexpectedly robust 5.4% in January, offering the latest evidence that inflation remained problematic. The PCE price index is the U.S. Federal Reserve's favored inflation gauge. BTC dipped near $23,000 at one point Friday, its lowest level in 9 days. ETH was recently off about 2.5% over the past 24 hours.
And see exactly what the chart's showing us, right? So if I bring up my chart here, what we can see is that NVIDIA ran into some pretty significant resistance. And again, if we look at this chart, this trend line here, it kind of connected through these lows and we saw a breakdown. And then finally, we rallied back up to the high level. Notice how price has been rejected. Based on this and based on a slowing economy, I'm looking at basically a price of NVIDIA that probably has to retrace back down to about $185. So you're looking at some significant downside. And again, whether it's an earnings related issue or whether it's just a global slowdown in chips, again, coming to the forefront, you've seen a lot of and this is what's interesting, right, is that the run-up in NVIDIA, in Tesla, in all of these things, Coinbase, it's all been a risk-on trade again. It has nothing to do with fundamentals. It's all about investors trying to recapture the glory of 2021. Well, we know in this environment where interest rates are where they are, that's not going to last forever, right? There's not enough money in the system like there was in 2021. So I do expect that NVIDIA does come back to at least $185 a share, and I would say that's probably even in the next week or two that happens. It's interesting to think about that, right? So we know that on both sides, right? The Chinese are trying to protect a lot of their data. The U.S. is trying to protect their data. There's becoming this protectionism within technology that we've seen over and over again. I think that it does hurt the long-term growth of almost any company, right? I mean, when you have globalization where you have companies that are easily able to sell their products in any country they want, that helps with growth. If there's a slowdown in one country, there could be another country that picks up the slack. Now, interestingly enough, the Alibaba chart gets my attention here, and I'm going to show you guys this one as well because I actually am looking to nibble on a little Alibaba on the long end. And the reason I'm doing so is because we had this amazing rally to the upside where Alibaba bottomed out around $58. It got as high as $120. Now, we've seen a pretty significant pullback here, but look at what we're coming into. We're coming into major technical support here and even just below right here. So for me, at least on a chart basis, this is now telling me, okay, I wasn't going to chase Alibaba up here. It's now retracing from $120 to now $94, could go as low as 88. But this is now where you want to start nibbling, or at least where I am going to start nibbling. So again, it's never a good thing to have the protectionism out there and kind of be shutting out different countries, at least for companies that produce things. But on a chart basis, you're finally seeing a level where Alibaba looks actually pretty interesting.
On a relative basis, BTC's 7-day performance was 22nd among crypto assets with a greater than $1 billion market capitalization. Ether finished 23rd among the group. Still, the two assets remain up 39% and 32% year-to-date amid a moderately more upbeat economic environment than in 2022. Technically, momentum for both BTC and ETH declined this week because their relative strength index, RSI readings, fell near the neutral level of 50. Bitcoin's price has declined for 4 consecutive days on above-average volume. ETH's price has fallen in 5 of the most recent 7 days.
So what we're seeing is Elon Musk starting to realize that competition is an issue, right? So he's doing whatever he can do. Obviously, lowering the price is a significant move to undercut the competition. So Tesla has the brand name, which is very, very strong. Everyone loves Tesla. Well, not everyone, but it has a big brand name. And then also you have the lower price. So this is a move by him. And what you have to read this on a company basis. This is him saying, okay, we have competition. We're going to sell less vehicles as a whole. Our market share is going to go down. So we need to kind of try to get that market share back by dropping price. Now, if we take a look at the chart, let's see what the chart is telling us. So if we pop over to the chart, we see that there was a lot of resistance right up in this range here where we got to. We've now started to pull back. Now, you do have a significant area of support right here at 188 to 189. If that breaks, I think you have a lot of downside in Tesla back to about $145 a share. So again, right now, I think you have to be a very, very cautious investor here. Number one, we haven't seen, it's not a real rebirth of the 2021 period where you had free money, QE, government sending out checks to Americans. I mean, people were staying home, so they had extra money to invest. None of that is the case anymore. You have interest rates, again, soaring to 5% on the Fed funds. So you have to be aware that these big bounces in these kind of tech names that were so popular, they're probably going to come back in at least somewhat. And I think, again, this level here around 144 to 145 is a good near-term target. So I am bullish on gold again. I don't think it has fully baked in and come back into the lows where I think it's going to go. But what I'll just kind of walk you through some of the trades. So when we were obviously down in this range, I was long gold. As we kind of got extended up in this range, I unloaded my gold positions. I did so just based on the fact that it was overbought. Now, one of the things I look for is as we retrace, I look for key pivot points. And if we see right here, you can see this low. And if we just take a trend line through here, look at how it goes right through this low, right through here, right through this high, and right through these highs. So that to me is your kind of max downside on gold here. That would be another classic retrace to the scene of the crime. And also, so that's right around $1,800. The other thing that's kind of interesting here is if we look at stocks like Newmont Mining, take a look at this chart. This chart here, look at all this support right in here and look at where price has pulled back to. So for me, I'm starting to actually accumulate. I picked up a little Newmont Mining. I've got a couple other gold miners out there. I'm not quite in the GLD yet, but I certainly am looking to buy it on any weakness here. I still think, and I said this at the end of last year, gold will be the best performing asset again in 2023 when you look and you compare it to the S&P 500 and Bitcoin.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.